Okay, welcome everybody. Doug here with the LincolnList.com. This is the stock market weekly review for the 1st of February. Hard to believe I'm already saying that. 1st of February seems like just yesterday. There we were at the beginning of the year, setting our goals and such, and here we are, first month of 2016 already down. Now I have to say, as far as from a trader's perspective, this was one of the nicest months. You had a lot of great volatility through January, and I hope you made money because this is one of the best months we ever had. Almost 28,000 plus in gains just from the day trade account only. So there was a lot of opportunity. Even though the market had taken a beating for the most part, there was just still a lot of great trade setups. And this is what hopefully you'll learn if you're not there. It doesn't really matter what the market does. You're going to see a lot of people out there, they're just rooting for bullish bias or a bearish bias. You should never do that. You should just let the market do what it wants to do. Let it make its play. You sit back with your strategies, have an answer or a strategy for both, and let the market do what it wants, and then react accordingly. If you do that, it will eliminate so much stress out of your head, and it'll put you in just a much better situation almost on every trade. Unfortunately, egos and biases, trust me, I've been there. I understand. I get it. But those egos and biases, that's what causes us to have problems. So anyway, you need some help. You know how to reach out to me. You know how to find me. LincolnList.com. So let's talk a little bit about it. We got a nice little rally, so to speak, here on Friday. One of those grind up. And if there is a market that I dislike the most, it's the melt up market because it's just so boring. It robs that volatility that I like so much. But I don't know if this was just end of the month window dressing. We're going to find out. And as I'm doing this, futures are down. I usually do this on a Friday night. I'm doing this on a Sunday night, so you can already see if futures are down. We'll see how this reacts. I think if we do see any upward momentum, let's just work on that. Let's say we do get some red to green, or we see a nice gap up or a push or some follow through. I would think you're going to fatigue somewhere around 195 into the last couple of pivots there into resistance. We'll see what happens. I would look at that 195 closely. I think this is a pretty good move, over the last week or so. You've made a move from 181 to 193. You're probably going to see at least a little bit of sideways trading or some sort of a pull. Now, we got a lot of different kind of news out there. We got China, we've got oil. So at any time, you might hear something come out, and this thing might just get whacked at 185. In my opinion, which I'm just, like I said early in the beginning of this, I don't follow a bias. I think in the back of my head, I'm not convinced of this rally, but anything could change at any minute. So that's all I'm going to say about the SPY. Look for 195s if you're on the bullish side. Look for some resistance up there. And then I think if we start trending below this 186, this last couple of pivots that held for the last week or so, you might see a retest of this little double bottom at 181, and things might get really interesting underneath of it. Now, there's a few stocks that I do want to look at. And one has to be this COH. I've been on this one for a couple of days. It doesn't have the largest amount of range that I've seen, but man, this stock is up a lot in relation to how it actually moves. As I said, it's only a $7 move, but this is a big move for this stock. Since they reported earnings, I get it. Earnings is a good catalyst for it, but I think when you look at this daily chart here, this thing just had closed. I got this red line drawn. Just closed right above the resistance. It goes back to the summer of last year, this 36.72. Now just right almost at 37s. I started into not from the day trade account, but I started into a small swing here. I just think this thing's got to start. It doesn't have to. Let me just rephrase that. I think when you see a move like this, so many strong days, you're probably on your fourth straight up day here. As I said, I understand, but you're probably going to get a little bit of a rest. I'm not saying this thing's going to collapse under 30. I'm just saying you're going to have an opportunity, I think, here in the next day or two to capitalize on a pretty nice down day out of this stock, even if it's just temporary, if it's just one day. When you get a stock that moves like this, all the good money, let me call it the easy money. The easy money's already been made on this trade. The smart people were already in at the 32s. They're going to start cashing out here, pulling some money off of the table. Anybody who's buying up here at this level is just flat out chasing this stock. It's going to need at least to rest up here, and then we'll decide what happens. As it's like a small short, willing to add to it. Actually, even though I'm already short, I hope the thing gaps up. I hope this thing freaking gaps up. First thing, 38, 39 me. I'll add to it because I think you're going to see a nice little pullback in COH. Maybe I'm wrong, but that's what I can see here. Another one that's had a very, very similar experience is this CRAY. Now, I don't have anything on this one, but it's definitely something that I'm going to be looking at really, really close going into Monday morning. This thing is up a lot too. Now this is kind of a former runner too. I shorted this thing back here, and I've always kind of struggled with Cray. I got to be straight up honest. There's been trades that worked out well, and Cray's been one of those ones that's been a little bit tough. So we've got some history, her and I. So let's kind of see what we do here. Like I mentioned with Co, I would certainly love to see a gap starting out the day that put me in a much better position. When I'm looking here, though, we got some earnings coming up on the 10th. So this is already running up prior to earnings. I don't like to make earnings plays whatsoever. But I think if we begin, we're starting out the month here with a big old move on this as well as Co. You start the day out with green. I'm just going to short. That's just based on the amount of days that we have as far as a run up. So there's two good stocks right there that, in spite of the back and forth action of the market that we saw over the last week, you got two stocks that pretty much have gone up every single day last week. And I think, as I said, I'm not saying they're going to collapse, but I think you're going to see at least a resting point, a profit-taking point. You're going to see some pull come out of this, or some money come out of these names and pull back just a little bit. Another one you might want to add to that is SWKS, this SWKS. A big move here and a nice little gapper off their earnings. They kind of like popped off the bottom a little, flagged, and then gapped. It's now above the 20 moving average, so that could be semi-bullish, but the only way I would be interested in shorting this one is if it began the day with a gap. And what I'm talking about, for those who don't kind of understand, this is a classic setup, is there's so many emotions that are running around early in the morning. When I'm always talking about gap ups, some people ask why. And you get these moves. Look at this. This thing just kind of gaps up right after earnings, shoots to 69 bucks, and within half an hour to an hour of the market, this thing just folds to 66.20. Yes, it comes back. But from a trader's view, this is some good cash right here. This is some good cash flow coming right out of a move like that. So something you want to look. When these things get overbought, you can kind of judge where the emotions are. This is just an emotional trade when people can't hold themselves down long enough to wait for a proper pullback, and they just chase in fear of making missing these moves, and that's what you see here. So I don't have a lot here. We'll just look at this COH CRAY, CRAY, and SWKS. You always got your usual suspects like Facebook. I think you've got some plays in here every day. It just really depends on the tone of the market and the way this thing sets up. Maybe even this, even though they had some incredible earnings, you're at all-time highs here. You possibly could see a little bit of a retracement here. I think when I look down the line, there's probably going to be other stocks that come available that are a little bit better, less cultish than a Facebook right now. That could be better, but you never know. I mean, you have to take into consideration a pretty strong move. Yes, I understand it's coming out of earnings, but earnings or no earnings, just like here, everything needs to pull back and everything needs to go up in time. So we'll take a look at this one as well. So anyway, I'm going to leave it like that. This is the beginning of a new month. January, as I said, what an incredible month. I mean, it didn't matter what the market did. It was just a lot of great opportunities. Looking to carry that momentum over in February. As I say with almost every one of these videos, if you're struggling, you're just not getting what you want. Visit the link and list. Just take the free trial. It doesn't cost you anything. Trade with us live each day. It's a completely different experience. It's not a chat room. Every trade that we do is live in real time, on screen, free access to scanners. I could go on and on, but I'm not. Just take the free trial if you need some help. As always, if you just have questions, feel free to reach out to me, service@thelincolnlist.com. Thanks for watching this video. I'll talk to you soon.